Funding for the Stoller Report is made possible by a grant from the First American Title Insurance Company of New York. The First American Corporation is the nation's leading diversified provider of business information products and services that impact the major events of people's lives.
Hello, my name is Michael Stoller, the host of the Stoller Report, Real Estate Trends in the Tri-State Region. The topic of today's broadcast is the state of residential and commercial real estate markets in Westchester. My guests include Robert Wise, president of the RPW Group, Anthony DiTommaso, CEO, Ivy Equities, Tim Jones, managing director, partner of Robert Martin Company, James Houlihan, we won't screw up your name, it's easy, but it's James J. Houlihan Jr., principal of Houlihan Parnes, ICAP Realty Advisors, Salvatore Capofranco, you see, we didn't screw up on this side, executive vice president and COO of Rex & Associates Realty Corp., and last but not least, Phil Wharton, senior development director of Avalon Bay Communities. About 4 weeks, maybe 6 weeks ago, Steve Roth, the chairman, CEO, king at Vornado, spoke at a program called Real Share. And in his presentation, he mentioned that in the 70s, people became mall people. And what he meant by mall people is that many people who were in New York City and other areas were relocating out to the suburbs. They felt that the suburbs were the place to be. And he said in 2004, people are no longer mall people. People want to return to New York City. They don't want to be in places like Westchester. Now, in all the shows that we've done, we've never spoken about Westchester, even though it's about 30 minutes from Manhattan. And it's even closer if you're from the Bronx and other areas. Now, do you agree that people are leaving Westchester? I mean, is Steve Roth, the visionary who just bought 4.3% shares of Sears and probably made a couple of dollars because of the merger with Kmart, do you think that this bright, and I think he's a very creative and bright guy, is right that people want to leave Westchester, or they want to leave Long Island? I don't want to talk about Long Island, even though, Sal, you have some property over there. Do you think, is this really happening in Westchester, especially since all of you own property in Westchester?
Well, I personally believe that that does not prove the facts. And on the residential side, houses probably have doubled in price. So that proves that people want to live there.
But aren't we with a limited number of houses?
Well, the prices of homes have gone up everywhere. And I don't think that is as a result of the limited number. I think it's as a result of a much greater demand. And the supply keeps going up as the demand keeps increasing. But I think what is interesting is the fact that people, if anything, want to have a better quality of life. And a better quality of life means spending less time in their cars and spending less time in the trains. So as a result of that, I think suburbia in general has been the recipient of companies that want to relocate or want to diversify.
I mean, he further stated that very few chief executive officers or chairmen of these companies are really living in the suburbs. They are living in the suburbs, but they are not residing in there. He said they would be taking their cars or the trains into New York City. You just bought this small building on Platinum Mile.
A tiny one.
564,000 square feet?
Close to that, yeah.
Which was the former headquarters of Atria, Kraft Foods.
Altria.
I mean, what happened to the people from Kraft Foods? Where'd they go?
Well, the company...
Some of them went to Sal's building, right?
I guess, yes, absolutely. Kraft went to Sal's building, and the rest of the people were just dispersed in a number of different locations that Altria has. But in reference to what your comment first, I think that Greenwich, which is a town that we are right next to, has probably a tremendous amount of CEOs and owners of major companies or presidents and chairmen of major companies.
Living there or working there?
Mostly living there. But if you look at the hedge fund market, you're going to find that Greenwich is receiving probably more companies percentage-wise than New York City.
Yeah,
and we see that as a next step.
As we said prior to the show, please interrupt and chime in because we want to.
I just want to say, I went to the Westchester Mall on Saturday, and I spent 25 minutes trying to park. Believe me, there are plenty of mall people out there. In fact, there are way too many mall people. I also, from a housing standpoint, prices have increased this year more than they increased in 2002 year to date. Average price of a house in Westchester.
For our audience, the average price, I believe, in Westchester was over $700,000.
Yeah, MLS. I was just looking at year to date. It's about $740,000, and last year was $650,000.
I think that let me just react to two things. I think Tim is right, but I think that there is a trend for people to want to live, work, and have entertainment nearby. Okay, and I don't think that the trend he's talking about is from Westchester to New York City. I think it could be within Westchester to be in White Plains. And that's why there's the resurgence of the cities, these satellite cities, even smaller cities. It doesn't have to be Westchester. It could be Fairfield, Westport, New Canaan, Greenwich.
Since we're really talking about Westchester, let's talk, people in New York City who watch the show, or people on the internet who view the show, they know about New York, and they've heard of Westchester, and they hear these statistics about the $700,000 average house. And then they see that the Donald is in partners with Mr. Capelli building this apartment house in White Plains. What is White Plains like? I mean, I take the train to White Plains. I think White Plains is a great commute. It's 35 minutes to Manhattan, plenty of trains going all back and forth, and there's great amenities.
Well, White Plains is a good city. It's a good example of a city that's going through the transformation to a 24/7 type of an atmosphere. There's entertainment, there's retail, there's very good residential, and businesses are locating there because they want to be close to that base of employment that is locating now in White Plains. Again, I think he's right in the sense that people want to be near. The work-live space concept is probably gaining some momentum. And I think White Plains and Westchester, with the smaller, older cities that were there, are all going through a gentrification that hasn't been seen in 10 or 15 years. So I think there's a movement back to cities, but it's not necessarily just New York City. It could be smaller, urban type or suburban type cities.
But Roth also stated that, you get the best attorneys, the best medical people, you get the best in New York City. I mean, he's biased. He owns 22 buildings.
He's got an agenda, too.
Yeah, of course he has an agenda. He has 22 buildings, he likes his office.
But before he became Vornado buying Midtown Manhattan, he was in the mall business.
That's correct. If you follow Roth was Vornado, Interstate Stores, two guys from Harrison, and that's what his business was. And he's, gentrified, or over 39 years, has changed his business.
But it's interesting. A lot of the big assets he's purchased recently have been mall. I mean, he's going after Sears,
he bought
the Monmouth Mall. I mean, so
Garden
it's not
State Plaza.
Yeah, he buys good deals. So it's. I think Saul's point is exactly right about people wanting to have live work environments. But you still see plenty of people moving from Westchester when it's moving from Manhattan to Westchester when it's time to move. When they've had the second child, or they're
schools.
They've got the schools drive them. They just want to save a little bit of money. You may have the most expensive attorneys, or the best attorneys in New York. I'd argue that, but you definitely have the most expensive attorneys in New York, and you have the most expensive rent, and you have the most expensive food. I mean, it's
and the facts are there's less CEOs since Sarbanes-Oxley, so. You can't say that they moved to New York. There's just less.
For our audience, that means public companies with having a little headaches of dealing with certain regulatory.
And there are a lot of CEOs in both Westchester and Fairfield County.
Now,
I want to say, when I was thinking about this, it depends on where you are in your life cycle, and I think Tim was talking about that. For myself, as a middle-aged person raising a family,
you're middle-aged?
Yep.
What constitutes middle age? No, really, I'm not,
36.
because that's going to answer a question of what
would
what has
say-
been sold in White Plains.
I would say my definition of middle age would be probably late 30s to late 50s, in that and around that age.
I'd say that's not middle age, but okay.
Okay.
None of the rest of us want to be middle-aged.
Right.
But I think, thinking in terms of, I have a daughter who's a senior in college. She wants to live in New York City when she moves back to New York City. She doesn't want to live.
She doesn't say, Dad, I want an apartment in White Plains,
Right.
or in one of the properties that Houlihan owns.
And I think what also happens too is that if you're at a point in your life when your children have finished school and moved on, and you don't want a 7,000 square foot house in Westchester, it's an easy transition to move into New York City and be close to the restaurants and the opera and the museums and all the things that New York City has to offer. But definitely in that mid spot in your life, New York City or other cities are not the ideal place to raise necessarily a family.
Okay.
I think it's about quality of life. I think it's broader than it was years ago, where when the kids came to move to the suburban markets, I think there's just as many people, a broader range of people that want quality of life. They want to be able to get to cultural events. They want to be able to have their entertainment. They want to have some peace and quiet, or be able to, move around with some relative ease. And so I think there's a lot of positives that go on for any of the suburban markets. Westchester happens to be, I think, very high quality. I don't know how much time you spend in Westchester, but I would say go up towards the north side of Westchester. I actually think you're in the Adirondacks. I mean, there's the counter to that within a 45-minute, or like you said, a 35-minute train ride from Grand Central, you could be in White Plains, or within probably a 45-minute ride from Manhattan, you can be in Westchester. So you could live in the country. I mean, he should ask a lot of his peers that happen to live in Westchester why they're up there. They're up there because they can get their hands on some very nice estates, or they can have a very different atmosphere and yet have great access to Manhattan. So I would say the opposite is true.
Look, he's trying to sell
No,
apartments.
I agree with that.
He's trying to sell apartments at
Right.
That's his job.
Bloomberg Tower right now
Right.
at 2,100 a square foot, and 2,100 a square foot means 1,000 square foot apartment
Sure.
is $2.1
You
million.
need a lot of people.
You gotta need a lot of people. But
The numbers are clear, and I think they really represent how the market is in Westchester County. White Plains in the past 3 years had probably $2 billion in development. That's for a city that has 50,000 residents. So that's $2 billion with 50,000
But
residents.
let's try to amplify that for the audience. This development is in a combination of residential,
Correct.
a combination of some
Retail?
retail,
Yes.
hotel, planned hotel,
Yeah.
major retail, lots of retail, and with Capelli, Ginsberg, Simone, and all the other guys over there. But as we said prior to the show, there hasn't been a new office building built in.
No, but wait a minute. Is that invested capital or just out of the ground? Like we put $50 million
That's out of the
into White
ground.
Plains.
That's only out of
Right.
the ground project now.
Right.
What you're saying
a
is
much bigger
correct.
number.
Right,
There's
but
been no
20
office
years,
buildings.
for 20 years, there wasn't a new office building built
That's correct.
in Westchester.
And we have moved from 30% vacancy to probably 12, 13% vacancy now. So even though we have a high vacancy rate of probably 13%, compared to what we had 15 years ago, that was 30%.
Do we have to go 15 years ago? I mean, Tim, how many years ago were you at 20% in
5 years
Westchester?
ago.
Yeah, 5 years ago.
5 years
But you
ago.
also look at Westchester, one of the reasons, there's a lot of inventory in Westchester. There are 30 million square feet of space here, 900,000 people. If you look around the country, cities like San Antonio, I think, is 3 million people. They have 20 million square feet of space. You could find that's more usual than Westchester. There just is a lot of space here. And there's a lot of, the CEOs and heads of corporations live here and want to be here. So it's the reason I think there hasn't been space built is because there's a great deal of space for the existing
but-
population.
but perhaps-
in the last 10 years, you went from owner-occupied to selling those buildings, making them multi-tenant.
Right,
So
you
in
had
my
to-
mind, that created inventory.
Repositioning.
Over the last 10 years, there's probably been
Yeah,
3
there
or
was a
4
there was
5
a
million
10 years of
square feet
shifting
of
dynamics in the
inventory.
market.
Right.
That market had gone from
Yeah.
big single-tenant users such as IBM and the likes in Texaco,
Right.
and it takes time for these buildings. They vacated, break them up, multi-tenant them, and
Right.
it's like a
Now,
10-year process.
now you own 2 buildings. You've owned 3 properties in Westchester. 2 of them you sold to this individual?
Three.
We said three
Oh, you
properties.
sold three
We sold
properties.
three properties to Robert.
What was the reason why you sold, since I know that everyone sitting here is high and likes Westchester, why'd you sell it to this individual? I mean, just because he bought this magnificent property, which is really beautiful on many acres, and a lot of people would have liked to build single-family homes on it, why'd you sell it to him?
Highest price is one, right?
That's not what you told me when I bought it.
It was a deal.
That's right, it was a deal. When our buying profile, we buy with private investors, we also buy with institutional investors, and those particular buildings were owned with institutional investors. We had held them for approximately 4 or 5 years, entered these buildings at a pretty good number. We've done some good things with those buildings, and felt like we had realized a great deal of potential. Robert has a different profile on his investors. I still think that his purchase is going to prove out to be very
No,
fruitful.
I wasn't questioning.
But
I was just trying to get a little.
It's really more of an
motivation.
institutional. It's more of the profile of the investor that we have with us.
I believe it was released last week. You still own one property in Westchester, in White Plains.
Well, we own an office building in Rye, 411 Theodore Frem Road, and we own 275 Main Street in White Plains.
Let's tell our audience a little bit about what you recently did in this property.
Sure.
A former Sears, which
Yes.
today is no longer Sears. It's going to be Kmart Sears Holdings.
Mm-hmm. Well, it was an old Sears. It was approximately 280,000 square feet, sort of old style department store retail. 3 floors, 6 stories of parking above it. Sort of unusual for today. We've purchased the property. We felt that we could reposition this asset. We were excited about White Plains itself, as just all the things that were going on. We're right across the street from Capelli's development.
For our audience, as opposed to inside baseball, tell the audience what Capelli's development is, or someone.
Oh, well, $350 million multi-use 238-story residential towers
Now, what
for
was
about
there
500
before?
units.
I don't know.
It was an old
Macy's department store.
Yeah, it was an old department store.
So this was a repositioning of another asset, Macy's, which.
Well, no,
moved
this was a ground-up development.
That's
Right,
correct.
knocked down the building.
Demolished
At
it,
one time, this was a Macy's department store demolished, where they're building 2 towers, and this is where Trump is part of
Right,
this
there's
development.
two towers that you see prominently from anywhere within 20 miles of the vicinity, but it's about 800 apartments. They have national amusements in there with, I think, a 15 or 20 screen movie theater. They've also put a little arts center in there. Westchester Arts Council is in there. They've brought some terrific restaurants, Legal Seafood, and some other outstanding places to eat. So it's a really fantastic centerpiece of a renaissance that's going on in White Plains.
And there's a Target.
And there's a Target, and there's a
Best
Circuit
Buy.
City, and there's a Filene's Basement. So he's done an outstanding job at really just transforming that whole Main Street, Mamaroneck Avenue section.
And now the super retailer, everybody, Big Bad Walmart, is going to come in to White Plains.
Well, I tell you that, it's been received well, and I'm excited about having Walmart as our anchor tenant. I mean, it's the #1 retailer in the world. It's the most profitable retailer in the world. It's chosen White Plains. I think this is very significant.
I think, I just made the joke about Big Bag. It wasn't that. They are the 800-pound gorilla.
Absolutely. Absolutely. And the fact that they chose that location, our building, with the environment that they're coming into, which is multi-story. They're going to be on 2 levels. This is unusual for Walmart. The parking is above them, which is unusual. It's really kind of an urban test for for the world's #1 retailer, and we're excited that they chose that. I think it shows the vibrancy of Westchester and White Plains.
To quote the mayor, Joseph Delfimo, the sky's the limit on new development in White Plains.
Mayor Delfino's excellent.
Yeah, he's very good.
He's excellent. And to his credit, I mean, we talk a lot about what I'm investing, what Rexon's investing, what Mr. Capelli's investing, Mr. Ginsberg's investing, but all of that wouldn't happen if it weren't for the pro business policies of Mayor Delfino.
Let's go to other cities in Westchester.
I was just going to touch on that. What's interesting is White Plains is a great example of a municipality that has good government and is pro-development and pro-business, so a lot of things can happen. But that doesn't happen consistently throughout Westchester County. We have a county government, but the county government doesn't run the engine, so to speak. It provides certain basic services, but the individual municipalities decide how they're going to be governed. So while you could have an example of good government in White Plains, you have a number of other municipalities that have lagged behind because they haven't had clear leadership, they haven't had good government, they've been reactive or been disruptive to development. And so it's spotty, it's not consistent across the board.
Yonkers, one of the largest areas in Westchester?
The largest city.
The largest. The home of Yonkers Raceway, the home of Stu Leonard's, the Cross County Mall. I think I'm pretty good on this. What's happening in Yonkers? Convenient to the city?
It is very convenient. But the problem with Yonkers is that they've had divisive politics for a long-standing period of time. So it's not an environment where you have people rowing together. You have people, if one group wants to go in one direction, the other group is violently opposed to go in that direction. And that's not an environment where it's easy to become proactive in terms of turning around a city or building.
I think what you hear today, it's very interesting, and we talked about this at dinner. Capital flows very efficiently today. And because of the consolidation in the real estate industry and the transparency in the real estate industry, companies need to get the capital placed efficiently and start to get yield on it.
So
these older cities where they're of the mindset of, well, somebody's got to come in and cut a deal with me, and it's going to take so long to do it, they're losing out. Okay, White Plains, everybody likes White Plains now. You remember in '96
terrible,
when
yeah.
we came in and we bought 360 Hamilton, which was empty for 10 or 12 years and was always on the Times as an example of the blight of White Plains. Nobody said you should go in there and do business. And the city realized if we don't get proactive, if we don't become efficient, if we don't have clear lines of communication as to what we want where in the city, capital's not coming here. And if capital doesn't come, you're going to be passed over. Because the days of some developer deciding I have to be in Yonkers and spending 10 years to do a development there is over. It's not happening. Capital needs to be placed. You got to have yields. It has to move efficiently. You have to have a clear path as to how you can execute your strategy. And some of these cities are doing that, and I think you're seeing the growth there, and some of them aren't, and they're going to miss out on the opportunity.
Agreed. 100%.
You know, for my audience, I mean, Robert is mostly in commercial office buildings.
Correct.
Anthony is, I'm talking about in the Westchester, I'm not talking about the other parts of the area. Also office buildings and the repositioning of this site, this
retail,
year's,
yes.
to retail. Tim is a combination of residential, condos, large, some office buildings. I just want everyone to know. Jim has everything. Potpourri of every type. Residential, retail, office, you name it. They're a value-added investor who looks at opportunity. Sal, in this marketplace, it's all office. Large office space, Class A office space. And Phil, last but not least, Phil is part of, works for Avalon Bay Communities, which is one of the largest residential rental REITs.
We do only apartments.
And only apartments.
Only apartments.
And only rentals.
Only rentals. And we're in a number of communities in Westchester County, but for example, New Rochelle, we're very positive about New Rochelle, and it may be the
Now, is New Rochelle,
the next White Plains.
as Jim was saying, is New
Proactive,
Rochelle a
very
user-friendly
Very
town?
proactive, very.
Absolutely.
We think they're going to be as successful as White Plains has been.
Now, in New Rochelle, I mean, White Plains, Rye, Harrison, we know that there's a mixed use. You have big commercial office buildings, you have residential, you have retail, you have this environment. What do we have in New Rochelle?
In New Rochelle, you have a downtown that's being revitalized. You have easy access to the city. It's 20 minutes as opposed to 30, 35 for the other communities. It's got a nice architecture downtown. We've got a lot of retail, new retail that's been developed recently. New Rock City, it's been very successful. We built our first tower there, and it was very much in demand, and it's full, and it's performed quite well. So there's the beginnings of things happening in New Rochelle, and the city is very proactive.
But this relates to a subject that I know my audience would like to know. You're building new residential apartments, beautiful residential apartments in New Rochelle, Bronxville, and certain other cities. Mamaroneck. The rent for those apartments, that you said prior to the program, are running about $27 a foot.
Well, it depends on the community. I mean, in New Rochelle, it's about $225. We think of it per month per foot.
Yeah, we have to.
Yeah, we have to translate.
But more important than that,
but Bronxville, for example, is a much more expensive community, and the rents there are much higher.
But if we,
Mamaroneck
you
is a
know,
little bit
for
less,
my guests,
local market.
for my audience, $27 a square foot, and Avalon Bay is building another tower in Long Island City, and another tower, a major development in the Lower East Side, which is a very hot neighborhood today. The apartment, a one-bedroom in Lower Manhattan, the market rate rentals would go for what?
$2,800.
$2,800. What would that similar apartment in New Rochelle go for?
Probably $2,000.
That's in new construction.
That's new construction.
Yep.
So
what I'm trying to do is get an idea
there.
also, because of, you
Yeah.
know, we're talking about people work and live and everything.
Our demographic is a combination of people from the city who can get a little more space and a little lower rent outside of the city. And it's also people within the community who want to stay in the community, empty nesters, 50s, 60s, who like Westchester County, want to stay but don't necessarily want to own a home. So we have kind of the two ends of the spectrum. It's people sort of transitioning in either direction.
Someone said to me recently, prices in Manhattan, New York City, not only Manhattan, how many people can afford to spend $1,000 a square foot to buy a condo? My question is, with a $700,000 average sales price of a home in Westchester, how many people can afford to live in certain parts of Westchester? Working people. Forget the CEOs of these organizations. I'm talking about that working class, that middle class person who's working there. $2,000 is still a high rent. I mean,
Well, it's a mixture of answers, Mike. It's the same. It's no different in Westchester than it is in New York City. For young people, a lot of them are getting support from their parents because they can't afford to pay the rents, or they're doubling up. And the same thing goes in the housing market for sale in Westchester County. Younger people who are first-time homebuyers or are trading up to from, say, a co-op to a first-time freestanding house, a lot of them are getting support from their parents. Parents are lending them money, helping them out, etc. And that's almost a must for people who are what you would define today as working class.
And they may be renting, but they may be renting in Mamaroneck or Mount Vernon or somewhere else. It's a little less expensive than, say, Bronxville. You know, there are separate rental markets that are very affordable for many.
The other demographic,
There's a lot of too. I mean, people living out. We talked earlier. People living out in Rockland County.
Right.
They're moving way up in northern Westchester County and just driving longer to get a better quality of living at a cheaper number.
the other demographic that you see today too is that so many married couples, you have two people working full-time jobs, and they have to because of the economics.
The affordability index probably it's changed some, but if you look at what's the average household income in Westchester County, it's
I know that I think it was 80% was 58,000. I did a little study, so the average income is probably $74,000.
yeah.
The average median income by certain cities.
Yeah, okay, so it's you can with that sort of income in today's interest rates, you can afford a $400,000, $450,000 mortgage. So, and a lot of it is people moving up too, and there is affordable housing in, there's a real dichotomy. There's some very expensive housing in Westchester, but there's also a large pocket of affordable housing.
And what do we consider affordable housing? Because those affordable housing, those people are going to have to be working in Robert's new building. They're going to go to the medical offices. Robert has a number of buildings where you have a lot of offices with medical office space. What are these?
Well,
What's affordable housing?
80% of the median income, if it's affordable by 80%.
It's $58,000. They say.
Yeah, so that would be, so if you said that you could use 30% of your income for
30%
$20,000.
was the old rule. Unfortunately,
It's not
people are spending.
35.
People today are spending 50% of their income.
So if you want to use whatever you want to use, 35 or 40%, so $30,000, $25,000 of your income, and today a mortgage is going to cost you 6%, something like that. So
I see then, yeah.
Yeah, or less if you do an,
A lot of
an
a lot of
adjustable.
people are doing. The younger people are not taking 30-year fixed rate mortgages.
Right.
Right.
They're
A lot
taking
of
5
interest
and
only.
10-year, adjustables, interest only, whatever.
There's a lot
Right.
of product out there.
But
So
I think that this analysis that you just did proved that the first statement does not conform reality. The fact that people are moving out of the city because they just can't afford the city. The median price of an apartment in the city is $1 million. The median price of a house in Westchester County is $700,000. So there are certainly people can afford it, but there are a number of people that cannot afford it. So what's happened with those people? They move further out of the city.
The other thing is, by extension, you're not comparing apples to apples, because if you take the median price of owned apartments in Westchester, it's not 700,000. It's
No,
probably 300,000.
It's around 300,000.
700, I think, is for homes.
It's a home.
So
Yes.
what ended up happening as a result of this is the people that are moving out of the city, they're looking for jobs closer to home. And that is what indirectly creates the market that we see in the office market in Westchester County.
And let's talk about the office market in Westchester County. You have these beautiful buildings. I mean, most of the office buildings in Westchester County, are 3-4 stories? I mean, with the exception of maybe the new in White Plains. Class A office buildings in Manhattan, in Midtown Manhattan, are probably renting, we will not talk about the tape measure of what the actual square footage, are renting for what, $60, $65 in
Yeah,
Midtown?
Range, I think
in
the
Midtown.
range from
Sal's got it.
range
Sal, you
from-
have it. You have
from
a building on
range from
6th.
upper 50s to as high as 70, so somewhere in that range.
So that's what we have in Midtown. The low-cost alternative is Lower Manhattan. It's probably $20 less.
Yeah, but Lower Manhattan is not getting momentum out of Midtown Manhattan. Lower Manhattan is going the other way. As a matter of fact, there's more product, there's been more conversions to residential.
Yeah, there's
in Lower
65
Manhattan.
buildings that have been
Yeah,
converted, but there's
right.
still space, but it's a $20 difference. So we're talking maybe $35, and when you take away the $8, because what the incentives really give you, you have a great deal. You're at $28 a foot, and that's for the best buildings over there. What are you going to charge somebody in your new building?
Our asking rent is $29.
Does that include electricity?
Does not include electricity.
And what is the rent in a Rexon building in Westchester?
If you're in White Plains in the CBD area, it's in the upper 20s to low 30s. If you're in the suburban markets, the east side of the market, Rybrook or Tarrytown or Valhalla, it's similar. It's upper 20s, mid-upper 20 type rents.
So if I was a company and I really didn't need to be in Midtown Manhattan and I wanted to get some quality of life, better schools for my children, save money, it seems like Westchester's the place. But why did you have close to a 30% vacancy for so many years? And that's with 20 years of no new buildings.
That was part of the whole
Overbuilt?
transformation. There was overbuilding.
Well, and the economic cycle. I mean, you can't.
Yeah.
You got to put it within the range of where the economic cycle was.
We're
In
talking 20
nine-
years.
No, you really.
I
it
mean, the
wasn't 20
90s
No, in the late 80s, Westchester's vacancy wasn't in the 30% range. I mean, Westchester's vacancy probably in the early 90s hit the 20% range. But you have a little more history than I do.
I'd say low 20s maybe.
Yeah, so I think
White
it's
Plains
it's,
was 30%.
Right,
That's what-
and-
Wasn't a
and-
lot of it
big
IBM?
fluctuation.
There was,
IBM
yeah, I
was
think,
There was a
But
big
you
fan.
know,
IBM
you were saying
consolidated.
before,
It was a
White
corporate
Plains is
move.
White Plains has the great transportation. Why did White Plains have this blight and this high vacancy?
Well, you're only 6 million feet in White
Right.
Plains. So that's 2 million
Oh,
feet.
it's skewing.
And White
Right.
Plains
So
even
it's-
there. There was some major corporations that went out, IBM and there was a
AT&T.
number of large corporations, AT&T that had.
Dollar Dry Dock went
You know,
bankrupt. And was,
There was a consolidation of corporations. Westchester suffered from having a huge concentration of headquarters space. And headquarters space of these multinationals got shrunk down, relocated, consolidated, and that's really what I think impacted a lot of Westchester. Texaco is a good example. How long was Texaco there? And Texaco ended up being bought through merger, M&A
Chevron.
type activity. You had IBM. There has to be 6 buildings of very significant size that IBM backed out of, even though there's still headquartered in the county that they backed out of, and it took a period of time for those to go through that conversion, as we were saying.
It's still going on.
And it's still going on. I mean, Kraft had,
Robert's example is probably has the last one that needs to be taken from a single tenant user and broken up.
we hope.
But the,
We hope, right?
But the-
There isn't much left.
No,
though.
there's not much
Reader's
left.
Digest. Reader's
that takes
Digest
a
may be
lot
the
of
last.
time.
Right.
Reader's Digest moved out of Pleasantville?
Reader's Digest is
They're
contract,
selling the property. They're
evaluating their
staying on a
property.
lease back.
Right.
I mean, if you look at the vacancy rate in Westchester now, and you take Robert's property, which is he just begun his redevelopment of, but as that comes off the market, I mean, you're going to look at a vacancy rate that's extremely low.
Right. Even in the mid-90s, the vacancy rate in the Class A multi-tenant properties, the ones that were not owner-occupied going through conversion, got up into, you maybe had a 5, 6, 7% vacancy in the top properties between 96, 97, 98, ramped up. There was still, though, 16%, 18% overall
No,
vacancy
even
because of the
right.
conversion.
But going forward, you're going to have less dependence on single big
Right.
corporate
Right.
users,
Absolutely.
so
It's gonna
some
be
of the
a better market.
volatility is going to be less.
Yeah,
So
much-
we
much
entered
healthier
the market
market.
that way.
Right.
We entered the market in the late 90s because if you looked at the high vacancy rate, but then you looked at some of the large blocks that were available at Kraft at the time and other places that were, you just took them out of the equation saying, geez, I'm looking at buildings with 5,000 square foot tenants.
Right.
They can't go there. Well, then you look at that, it was like 9%. So all of a sudden we started buying buildings in Westchester.
We
And it
did
still
this-
stands like that today.
We did the same thing. We bought 3 buildings in 2001 in the Central Business District in White Plains, about 200,000 square feet in aggregate. And at that time, the published vacancy rates were in the high teens.
Right.
So that's a challenge when you want to buy and you want to do acquisition financing. So what we did was we commissioned Cushman Wakefield and I think C.B. Richard Ellis to do 2 independent studies and tell us what blocks of space in the Central Business District were available, what percentage was available that were blocks of under 15 to 20,000 square feet. It was like 6%.
Right.
Because you had big blocks of space that like MetLife was trying to move
Right.
it as one block of space,
Right.
didn't want to spend the money on the infrastructure, didn't want to subdivide. That's changing now, and so those spaces are being gradually rented and absorbed. Kraft building on Cross
Westchester,
Westchester was a
right.
classic example, the same thing. So once that space gets absorbed, it's part of the marketplace and then multi-tenant buildings.
Westchester, let me just tell you, Westchester is not Dallas. I mean, Dallas has 30% vacancy, and when you go through Dallas, it's very nice property that has 30% vacancy or is empty and see-through. Westchester is not for the faint of heart. None of us here would say it is. but-
Westchester is 30 minutes from the largest city, largest business city in the nation, and the second largest being Lower Manhattan, Midtown and Lower Manhattan. So the convenience, the availability, the accessibility to professionals, even though Manhattan professionals may be more expensive, the medical quality, Houston is Houston. You know, Dallas
Houston's
is,
got great education
medical.
base and great, don't worry, Houston has an awful
No,
lot,
they
you
have
know,
vacancy
the same-
also. I mean, they have MD Anderson. But, I want to bring out a statistic that I caught up there. According to the 2000 Westchester population, there were 923,459 residents in Westchester.
What year was that?
2000.
2000.
And according to the statistics, 15.6% were Hispanics, representing an increase from 9.9. And the comment was that Hispanics have passed blacks and have become the largest minority group in Westchester. Do you see that?
And they're all in $700,000 houses. It's amazing.
I don't know where they are. I'm just, it says,
No, there's a lot of cities. That's what we're saying.
I mean,
There's a-
Yonkers, they said
Peekskill is going
there are
through a huge
50,000, there were
gentrification,
51,000 in Yonkers. There's a large group in New Rochelle, White Plains, Portchester.
Portrait.
Ossining
Mamaroneck.
13,000 in Mamaroneck,
City of Rye.
Briarcliff and Tarrytown. They said they're looking at the numbers.
These are recent immigrants mostly, I guess. So that
You look
it's
at
great
this-
for the economy.
Do we take Uruguay?
You're great.
I guess that's been,
But you know what's interesting? It used to be that the stonemasons were all Italian immigrants. Today, they're almost all people from South America. They're Hispanic. If you want to build a drywall at your home, you might have an Italian contractor, but all the guys who are doing the stonework and get paid decently, $100, $150 a day.
But you
They're
know,
all Guatemalans.
but this relates to the idea that everybody wants to have, they want to own their first home. They want to have a piece of the rock. Steve Witkoff, who was on the show a couple of months ago, stated that the place where you can you buy your first home in Manhattan is Lower Manhattan. The prices were at a price that they were reasonable. With the latest sales of new apartments in Lower Manhattan, I don't believe it's reasonable anymore, because they're $700 a foot, $700 a foot. If you want to buy an apartment in a condo development that the Robert Martin Company is developing, how much would that cost?
the new condos are going to be, in the $350 to $450 a foot. But that wouldn't be your first home, probably. Your first home might be, and especially if you're an immigrant.
No, I'm talking about the first home that you would buy.
No, your first home that you'd buy probably would be in a community that would be less expensive. I mean, there's housing stock.
Would you buy? I mean, you have properties that you have co-ops,
Right.
and what does a co-op run? I mean,
Well, I would say
in
that-
certain parts of Westchester.
For instance, we have a couple of buildings where we own blocks of unsold shares in Bronxville, PO, Yonkers, right, in walking distance to Bronxville, which is very nice, the other side of Lawrence Hospital. Two-bedroom there would run you in the high 200s to high 300s in an older building, and one bedroom would be in the high 100s, low 200s.
That's a great
So it's
location.
affordable.
It's
By
a great
Midland
location.
Avenue Central,
Yeah.
there's the inventory. You're focused on new inventory and the price point. of new
I'm focused on
inventory.
all inventory.
There's
and
a
that's
lot
why
of-
I asked Jim,
there's a
because
lot
I know
of-
Jim.
There's a
lot of
real
older
range.
inventory, right?
There's
that
a
is-
real range.
that trades at a different price point and is very good housing stock, and I think that's where the
Right.
people are
A lot
buying.
of the first-time entry buyers too, who are coming up from a blue-collar background, middle-class income, they buy a 2 or 3 or 4 family home,
Right.
and they live in one apartment, and they rent out the other 2 or 3, and they make money, pay down their debt, and then they move on from there.
You have a few communities, especially in southern Westchester, they have been historically towns of immigrants. And Mount Vernon being a typical one that started with the old German immigration that was working on the railroad tracks. The fact that it was so close to New York City and it was much more affordable was a natural place. And over the years it had changed. It had Jewish immigration, then it had Italian immigration, and currently the largest immigrations are Brazilians and Jamaicans, and they are hardworking people, and they usually have, as Jim well said, a 3 or 4 family home. They're paying it off, and then they move. We have several of our employees that now they live in Fairfield, Connecticut, or they live in northern Westchester, and they started buying houses in Mount Vernon or New Rochelle or Yonkers, and they keep moving north.
And they don't necessarily sell that first house, they keep it as
That's
an
correct.
investment.
No,
But we have all the people who aren't buying, for whatever reason. Some of them are moving out of the
so
city.
what's the profile? What's the profile of a tenant in an Avalon Bay, Westchester? Because the Long Island may be different than or New Jersey. I mean, you have so many communities all over the country.
I mean, it's people who are in transition for a variety of reasons. One is they're moving out to the suburbs and they're looking for an affordable home, and while they're looking, they rent. And sometimes that can be 2, 3, 4 years before they find something that they think is reasonable. It may be people who are older, empty nesters, who want to stay in the community, I mentioned before, but don't want to own a big house and maintain it. And sadly, there's also a lot of divorcees in a lot of our houses, or in a lot of our apartments, or people who want to stay near their family and see the kids, but can't afford a second house, but they want to stay in the community. So our average tenant, there's really no way to describe it.
If you had to say the average age?
I'd say early 30s, because there's certainly a lot more there than the older. The average stay is probably 2 years or less. So their life is in transition, and buying now more than ever is a huge commitment. And so they're not ready to make that commitment, or they.
Speaking
they
about
won't.
buying now, let's talk about interest rates.
Well, I was going to ask him, aren't you finding it harder to rent with the interest rate so low and people trying to take advantage of buying, even though the prices are higher, because they can lock in
We had that worst, I'd say, in 02 and 03, in 04, and when I say worse, it's not the same volatility that you have in the office market. It meant we went down to maybe 92%
Right.
instead of 97%.
Wow.
And so our rents, maybe our vacancies were a little higher, and then in 04 they really came back. The rents really haven't been increasing.
So
this
you
past
feel the
year,
rental
but they're-
market's
it's stabilized.
has stabilized since the...
Yeah, and I think if interest rates continue to climb, our rents will probably go
And
up.
let's get to interest rates. If interest rates climb, you have Mr. Capelli, who's building, I think there are other developers who are building apartment houses or these structures. The question is, if they haven't developed yet, I think prior to the show somebody mentioned that there's a lot of planned development of new residential.
Yes, and White
Probably
Plains.
10 projects.
10 projects. Interest rates, I'm not an economist, but interest rates are going to increase. They are increasing. What happens when you're the last man standing? The last builder who builds.
You don't have a
Maybe
chance
you
to
are
sit
not.
down.
Yeah, well, that's a wild card in the market right now. I think that one of the issues is how steeply they rise and how quickly they rise. So if the Fed's been raising rates quarter of a point, we're seeing the 10-year Treasury go down.
Went down, went up again, right?
It went down, went up, went down. It's been pretty stable if you look at it on a chart over the last few years. It depends on how quickly they move and how fast they move. I think they are going to move up. I think it has to move up. But again, if it moves up gradually over time, I think the market will absorb it. If it moves quickly, there's going to be some pain.
But let's look at somebody like Tim. You have land, right? And you're planning to develop this land for residential.
We have some residential land and also we have a variety of different types of land, but I think housing will clearly be impacted if rates move up. Entry-level housing is what gets hurt the worst. The affordability calculations we did, if it's instead of 4% or 5%, it's 9%, it's not affordable anymore. One thing, though, I think that will help the housing market is the demographics of the baby boom. And the baby boomers, most of them probably don't have any mortgage on when they're on a new home, their empty nester home that they buy. So the units that are being built for that use will be much less sensitive to interest rates. I don't think interest rates affect the office market. Office market's job growth, and so it's really we've been an economy. We haven't seen there've been jobs. There's been job growth in some areas, but not that much around here. I think if the economy continues to improve and there's job growth, then the office will fill up. And then around here you have a constrained supply on housing. So if you have more jobs, you're going to have more demand for housing, and even the number of units we were talking about building is a very, very small percentage of the housing market. I mean, the overall New York area is so undersupplied for housing, and it's so hard. We've got a deal we work on together. We spent years and years trying to get a zone site approved, which is just kind of typical. The development that's happened in White Plains recently is very atypical for Westchester County or New Rochelle is another place.
But I think White Plains is an example where there might be some heartache there, because there's a lot of condos being developed for a market that hasn't had a lot of condos, and there may be someone who's the last man standing who, is not going to get the prices that he wants, or is
What
going to
about the last
convert back
man?
to rental.
There hasn't been a new office building in Westchester constructed in 20 years.
Because I think you've had reconstruction and reconfiguring of a number of different large vacant buildings. Altria may be one of the last to come, but
Right.
they just went through it. So Well, it's not ground-up construction. If you're taking a vacant building that houses 300,000 square feet and you're investing millions of dollars to reconfigure it and to reposition it, and then you rent it up, that's creating jobs and tax dollars that didn't exist while it was
You
vacant.
can make
I
a
would
great
agree.
argument that
It's-
Sal's building at 360 Hamilton is a new building. I mean, if you've been to the building, I mean, it's what
that-
what an outstanding example of a redevelopment. I mean, it's
And I think in
fantastic.
Westchester, to its credit, it probably absorbed, would you say, 5 million square feet of repositions from single owner-occupied buildings into
At least.
multi-tenant
At
buildings?
least, at least.
And we're talking since '96.
That's pretty significant.
So that's a lot of inventory to absorb, and the market did it, and it stayed within a
Where
reasonable range.
where'd those people come from? Are they new businesses,
Well, a lot of- I
large
think-
increases, and
I
the
think
business is growing, or
there's
are
two
there
things.
relocations?
I think
Our
there's-
buildings,
Miscellaneous
he has
of
bigger
things.
tenants than I think. I think he's atypical of maybe the other owners like Robert and I have been in the market, but we're mostly 4,000 or 5,000 square foot tenants. But some of them are big companies. Could be,
But
you know, it could be
I
offices
agree,
of
but you
a
know,
New
4 or
York
5,000
I'll tell
4
you
or
another
5,000
thing.
is
Yeah.
different than what we spoke
No, but
before. You're
very
at 14,000 average size.
I
and-
think if you really look at Westchester, between 91 to 94, there was a huge swell of inventory because prices came up out of the down cycle, and owner-occupied buildings were trading. That's about time when you first came into the market, we
Right.
first came in. There was a huge swell of the middle-sized businesses between the 5 and 15,000 square foot users running from 96 to 99. Existing companies in the county that came out of the previous down cycle that expanded. And then there was the tech companies that came in. A lot of the space there was a lot of tech companies that came into Westchester as a result of IBM's stronghold that was there,
were
good
they
infrastructure.
tech or were they .com?
They were tech and .coms. Well, they were significant sized .com companies. You know, TradeOut.com, Monster.com came in. There's some big names. There was a lot of
Ones
venture
were still
capital
alive.
startup guys. But that took a lot of that inventory. That's what gave us a swell from 2000 to 2001, where the vacancy went back up, was kind of the tech and telecom bust, because there is a fair amount of telecom companies in Westchester. And I think now, if you look at Westchester, it's been large users that have come in.
If
Morgan
we-
Stanley, New York Life, etc. But if I go back to interest rates, 1 minute, I have one area I think, and you would be interested to see what you think. I think there's the 10-year Treasury, and then there's the spread. And the spread over the 10-year Treasury has been adjusted for the risk of where they are in cycles. You know, the capital markets today are much more efficient. There's information about what's going on in real estate that anybody can get. It's not like years ago where you went to your banker, you gave him a pro forma, and you said, trust me, this is what we're going to do with this property. Now they look at
Don't worry, they
all
had
sorts of-
Houlihan, the best mortgage
Right,
brokers
these guys.
around.
So
Trust 'em.
there's a
No,
lot
not
more.
them. They were always good. They
there's
never hurt a bank.
It's much more fluid related to capital coming into the market, and I think spreads, as much as interest rates are lower, you saw spreads moving up, of which somebody is borrowing, and it was on a risk-adjusted basis, and that's moved pretty significantly. So I'm not so sure the last guy in may have already been weaned out, because that spread may have come up, and he may be, is out of the game already. So it may be a little
I think
different.
where the real danger point is that there's been so much capital, both on the debt and the equity side, available, not just in Westchester, but in our whole market for a sustained period of time. We really have had a sustained period of growth since about the third quarter of 1992, without any really significant downsides. And so we've had cap rates on all kinds of investments reduced to a point now where it becomes a dangerous game, because the desire is to get the capital out, the desire is to make the next deal, and you're buying on tighter.
That's a lender's. I have
No,
owners here.
no, but it's from an owner's perspective too, because if you're buying on tighter and tighter margins, and what you're using to support that is low interest rates, if you don't sustain the low interest rates, the whole investment strategy collapses.
Yeah, but
there's
Westchester
great-
has
but there's
not
great
been as
liquidity,
tight
though.
as other areas. Frankly, what you're saying is absolutely correct. However, Westchester still had bigger margins than other areas. So I will even predict that by 2006, we will probably be facing not only higher rents, probably in the 30s, but the price per square foot is going to increase dramatically, even though interest rates are going up.
It's hard to believe, but we're close to 1 hour, and in order to talk about Westchester, it's taken me about 45 shows or 50 shows to talk about Manhattan. And I've done Long Island, I've done Queens. I hope that many of you or all of you will return when we talk about specific markets in Westchester over the next year or the year and a half. I'd like to thank all of you for being here. Robert Wise, RPW, Anthony DePasso, IV Equities. I
You're
screwed
getting
up.
closer. You're getting
Okay,
closer.
closer.
Di Tommaso.
Tim Jones,
Bonus.
Managing Director, Partner, and the tallest guy standing here, Robert Martin Company.
Jones is so easy.
Jones.
I know. You got it right both times.
James J. Houlihan, Principal, Houlihan Parnes ICAP Realty Advisors. Salvatore Campofranco, Executive Vice President, COO of Rexon Associates Realty Corp. And Phil Wharton, Senior Development Director of Avalon Bay Communities. Next month, I don't know how I'm going to handle it, but the topic is, what do the real estate experts see for 2005? See you next month, and thank you very much for being here.
Funding for the Stoller Report is made possible by a grant from the First American Title Insurance Company of New York. The First American Corporation is the nation's leading diversified provider of business information products and services that impact the major events of people's lives.